Welcome back to Switzer. The media has been preoccupied with a housing bubble, but just how real is the threat? And so tonight we have a real economist who actually specialises in property to give us an expert view of a bubble threat and what will be the implications, say, for property prices and the economy. Kim Hawtrey is Associate Director at BIS Shrapnel and joins me here in the studio. Kim, how are you?
I'm very well, Peter. Glad
I know you're a real economist because I worked with you and you went off and worked for the State Bank of New South Wales or something, what, Colonial or one of those?
Indeed, became the Commonwealth Bank.
You became Commonwealth Bank, yeah. But were you chief economist at Colonial? Or?
I was.
Yeah, so you've done the whole thing, the academic bit, the banking bit, and now you're BIS Shrapnel, probably one of the best property agencies in the country.
We like to think so.
Oh no, well, I would say you're up there. Now, you're there, and everyone's talking about housing bubbles, and we can't open up a Saturday morning newspaper without being worried about a bubble. How worried are you about a bubble?
Well, look, it's all happening at the moment, isn't it? And you've got auction levels going through the roof and you've got queues forming around the block. And look, it's only 6 months ago when everybody was worried about whether the housing sector would ever take off. And suddenly somebody flipped the switch and confidence really came in. We've switched from a vicious circle to a virtuous circle in the housing sector, and that's really evident in all of the evidence that's coming through.
Tell us why you say virtuous.
Well, all the factors are aligned. You know, you've got low interest rates, you've got an undersupply because of so much population growth that hasn't been built for housing, and you've got an improvement in confidence in the last couple of months. Maybe it's due to the change of federal politics, maybe it's due to some better news from overseas. Maybe it's just due to people getting tired of being pessimistic. So all of those things are laying the groundwork for a pretty good outlook for 2014.
Yeah, but you use the words pretty good outlook, and that's what I would have thought, particularly when I looked at the 10-year figures from RP data. I don't know if I should mention that, but they looked at 10 years, and the average increase in Sydney was about 2.5%, which was pretty ordinary. Now, I would have thought if we start getting nice rises, I would call that a recovery. I wouldn't have gone to the panic station saying, a bubble is forming. Talk us through the difference between a good housing recovery and a bubble.
Yeah, what we've got at the moment is buoyancy, but we don't have a bubble, nothing like a bubble. We're really playing catch up on, actually house prices haven't kept pace with household incomes
or inflation
since the GFC, or even inflation. So we're really just playing catch up. And look, there's a number of factors. First home buyers are not yet really in the market.
No.
Melbourne
why is that? Because the figures today, lowest reading in 23 years, because that's the 1990 recession. A lot of people were spooked then.
Yeah.
Why do you reckon first home buyers aren't participating?
Well, the government changed the rules on them about a year ago. They made the first home buyers about new dwellings instead of established dwellings.
Oh, okay. Yeah.
That took people a little bit by surprise. If you're a first home buyer, it's going to take longer to save up a deposit for a new dwelling. And it's taking a while for the developers to bring apartments to market instead of houses. And so there's a bit of adjustment going on. We do think that first home buyers will come into the market in 2014. Right. And, but at the moment, the investors are really elbowing them aside.
Now, some of the arguments for the investors coming in has been because it's easier for a self-managed super fund trustee to borrow over property. How big do you think that is at this point in time?
I don't think that's the biggest driver. It's a factor, but it's not the main explanation for what's happening. We've got a lot of overseas investors. We've got some baby boomers, and we've got people who've been a little bit scared off from the stock market by the global financial crisis.
Yep.
They prefer to put their money into bricks and mortar rather than into paper assets like equities. So I think
it's quite rational given the fear of the stock market.
A real search for other alternatives to the stock market is happening.
You threw in an interesting issue that lots of people ask me about, is how significant is the Asian, I won't use the word invasion, that would be a nice play on words, the Asian intrusion into the real estate market. Is it significant?
Pretty significant in Sydney and Melbourne, in the apartment sectors of those two cities. A little bit coming into Brisbane now as well. The last big Asian boom we had, if you might remember, was the Japanese back in the late 1980s.
Yeah, they loved the place.
They were really interested in commercial property. That one was about offices and about hotels and so on. And this is the next one that we've had since then, which is mostly Chinese investors and residential driven. And it's partly related to the number of Asian students who are studying in Australia, and sometimes their parents buy them an apartment. But it's also driven by changes occurring in the Chinese sector itself. They're actually trying to cool their housing bubble by clamping down restrictions on their housing investment, and that's driving some of their residents offshore to places like Australia.
And of course the Chinese currency is going up and the Aussie currency is going down, so there's also those economic signals saying, hey, there's some value here.
What we're hearing is that they're long-term investors, so the short-term currency movements are not really playing a big factor in their decision-making. They're in for long-term portfolio investment.
Okay. Let's go around the... Oh, no, before we go around the country where you think things might start hotting up, given the fact that the mining boom is not as boisterous as it was, say, 2 or 3 years ago, if we go back to our old-fashioned economics lessons, a housing recovery is kind of the early stages for the economic recovery. Are we seeing a housing recovery that will be the platform for a better economy in 2014?
What I think we've got at the moment is a kind of awkward teenager stage of housing recovery. A bit of a
pimples and all.
A pimply teenager is what we've got, because it's pretty uneven. We've got at the moment all in high-rise apartments, not enough coming through in detached houses. It's houses which generate the demand for materials like bricks and plasterboard and so on in great volumes. We're also seeing very little A&A activity, that's alterations and additions.
Really?
People are not yet doing home improvements, and that's another big driver which has multiplier effects across the economy for hardware stores and department stores and so on. So those factors, and you know, look, you've got to recognise that it's very much a city-based recovery at the moment. It hasn't yet taken off in the country and regional areas.
So, given the fact that you made the point that things seem to have improved since the election, to get that kind of A&A investment into renovations and whatever, do you think we need to see a period of sustained low interest rates, rising confidence, and probably an improving employment outlook before people start chancing their arm to start renovating their property?
Well, the main driver of home renovation is price rises. If people feel their property is becoming more valuable, then they're willing to invest a bit more in it. But there is a little bit of uncertainty out there about the jobs outlook, and I think people will be watching the unemployment figures that come out over the next month or two. But we feel that people will start to open their wallets on home renovation next year, and that'll be an important sign, if you like, that the recovery that the Reserve Bank is looking for to really take the place of mining is underway.
So, 2014. Are you, or have you raised your economic forecast for 2014, given what you've seen over the last, say, 6 months on the economy?
We've certainly raised our expectations of building activity, and we think that actually people are now being a little too pessimistic. If you look at the numbers, the industry's not doing too badly.
No,
and things have picked up pretty well.
Because like new owner-occupying loans now have increased 8 out of the last 9 months, which is not a bad early sign that activity is on the way.
Look, the latest figures that came out today about home loans show that lending for new homes, that's new construction, is up 17% in the last year. So that's pretty solid. Of course, it's coming off a pretty low base, but that's solid growth, isn't it?
Yeah. All right, now, what about around the country? Let me put you on the spot. Kim, imagine you're at a dinner party on the weekend and someone comes up and says, look, I want to get in this property market. It's getting really good. What capital city should I be going for? What do you reckon?
Sydney, number one.
Even now, even though it's kicked off, it's still number one.
It's still got a way to go. And then we'd say Perth. Perth has still got quite a lot of momentum, even though the mining investment boom is cooling. It's a go-ahead state with a lot of population growth. Brisbane.
I was wondering, because Brisbane has suffered over the last few years after being a real stellar performer. But you're starting to see some signs in Brisbane that not a bad investment opportunity.
Look, before the GFC, places like the Gold Coast were overhyped,
Yeah.
overbuilt,
Yeah.
and that kind of had a bit of a spin-off effect, unfortunately, to Brisbane.
Yeah.
But now we're seeing a significant, I guess the bad vibes have had a chance to wash out in southeast Queensland, and population growth is pretty solid. So we're reasonably confident about Brisbane.
Easy question for an economist. Interest rates. Are we at the bottom of the cycle?
The case for changing interest rates is now weakening. The case for cutting interest rates further is now weakening. And for every bit of good news we get out of the US, which increases the chances of tapering happening sooner rather than later, then that further diminishes the need, I think, for further rate cuts in Australia.
Because it'll probably weaken the dollar, and that's like an interest rate cut.
That's what it's all about.
Yeah.
The RBA wants to see that Australian dollar come down.
Kim, great to join me in the program. I'm glad we basically agree on just about everything. That's terrific. It's unusual for economists to agree.
Thanks a lot, Peter.
Cheers, mate. If you want to read my thoughts each morning at the close of Wall Street, check out my website, switzer.com.au. And if you have a self-managed super fund, have a look at the switzersuperreport.com.au website. I'm Peter Switzer. Thanks for joining us. I'll see you tomorrow night.